Orasında olacak döngüyü son çeyreğe doğru sarkıtma ihtimali var mı sence?
Tabii hocam, Amerika Birleşik Devletleri için %2'lik bir ekonomik büyüme ne anlam ifade eder? Belki çok kısa ona değinebiliriz. Yani 27 trilyon dolarlık bir ekonomi var. Yani onun %2 büyümesi demek 500 milyar dolarlık bir
Batı ile Doğu'nun birleştiği, gerçek manada birleştiği, coğrafya olarak değil, kültürel olarak da birleştiği tam bir köprü Türkiye. Bu
Hello there. Here's another episode of Straight Talk. This time we're kind of going to be doing a bit of a role reversal. I'll be more the interviewer as opposed to the person being interviewed and grilled. We've got a very special guest today on the program, Deniz. Now, Deniz is one of our hidden gems at Property Turkey. Now, when I explain to you who Deniz is, you will understand exactly what. Deniz has been with us for almost 5 years now. And 2 years, Deniz, full-time. And prior to that, you were part-time with us for quite a few years. But you've been with us full-time for 2 years now.
Yeah, full.
Deniz works for a very important government organization known as a think tank of the Turkish economic analysis system. Deniz has got an MBA in economy and business development. And as if that's not enough, Deniz went ahead and completed his PhD in international politics and international economics, right? So now, what Deniz provides to Property Turkey is amazing insights as to rules, regulations, and economic indicators and the economic program of the Turkish government. So we tend to get a lot of information from Deniz and some very, very useful analysis, which we use in projecting and predicting the future of Turkey. More specifically to do with the real estate market, since this is our main thing. So Deniz, there you go. Introduce yourself.
Hi guys, this is the first time to be here. I am very exciting about Deggin, and we will do some estimation, right? Estimation about the future, estimation about the real estate market, estimation about the world economy, and also Turkey. And why we doing that? This is the first question. Maybe we should ask, or we should answer together. Because we want to introduce the true information about the Turkey and the Turkish economy the first hand. So, Cameron Deggin, what did happen last 5 years in Turkey and the Turkish economy? As a foreigner and as an investor of Turkish economy, how did you learn some of experience, or what did you learn about the Turkish economic culture, let's say?
Well, I think Turkish economy is a bit like the Turkish culture, which is...
This is the right question, right?
Well, I think so. I think Turkish economy, the way it's kind of portrayed, the way it shows itself is a little bit like the culture, Turkish culture, which is ducking and diving to some extent, and it's a bit of a trader's culture, and well, we've seen that, in my opinion, in what happened with 2018, the devaluation of the Turkish lira in 2018. So when everybody expected in 2018, when Turkish lira devalued, and inflation started creeping in, when everybody expected Turkey to increase interest rates in order to arrest the inflation and suppress inflationary forces, particularly demand-driven inflation, which is what we see in Turkey generally. And what happened is Turkish government went the other way. They started cutting down interest rates.
Why?
Well, the way I see it was that the government did not want to bring in austerity measures, like many other countries did at the time. Austerity measures to try and kind of arrest inflation, but in doing so, most austerity measures that we see around the world, and exactly what Turkey is doing today, is it's kind of slowing down the economy. As you increase interest rates and as you bring the country into austerity, what you effectively are doing is you're applying the brakes on the economy. You're slowing down demand and you're slowing down economy so as to control
you saying
prices.
this. Yeah, I understand this. Last year, Turkish economy total GPD, let's say, surpassed $1 trillion.
Yes.
Because of that?
Well, I think the fact that they did not increase interest rates at the time and they allowed the economy to
Growing.
accelerate
Yeah.
and grow did indeed contribute to Turkey's GDP moving from, I think it was 750 billion about 5-6 years ago to over 1 trillion last year. Now that's a phenomenal growth, economic growth for any standards for any country to observe. So Turkey managed to do that, but at what cost though?
This is always there was a cost.
At what cost? Go on, tell me. You're the economist.
I
at
think,
what cost?
Coast did many things. The audience, people, they affect everything about to our normal life. People face off increase of prices and other things. That's mainly inflation. But the government, I think, choose another way. I joined something like Al Jazeera. I think I don't remember the channel now because I join a lot. They asked me the same question. Why? Why Turkey choose another path?
To reduce interest rates when
why?
inflation was going up.
Why? This is not right thing to do. And I answered this. Turkish government choose employment, choose economic growth, choose the future. Turkish economy, the last statistic, I think the TÜİK or World Bank, you can check it. Turkish economy, last 3 years, only 3 years, create 4 maybe more employment.
4 million.
4 million employment. It is not fixed on Turkish economy. It is, if we say in US, it is normal. But in Turkey, we cannot use that data. Is a normal data. The government choose the employment and the economic growth, and now IMF published a data about the Turkish economy. Next year, Turkish total GDP will reach $1.4 trillion.
My God. So that's almost like another 10% increase,
yes,
close to.
Yes, and
year-on-year increase in GDP, economic growth.
Year-on-year, end of this decade, we will see the Turkish total GDP will reach $2 trillion, and probably will reach Spain, and then will come close to very Italy. Turkey will grow, and the government choose that. It is not the wrong decision, I think. Yeah, they choose the employment like China, like South Korea, like Japan. I can give some of more example about that. But Turkey saw an opportunity. After the epidemic, all the countries cut the expenses, cut the interest rate, they close the firms, they close the employment, and they do something to protect their country and their economy. But Turkey did another thing. Turkey did choose employment, and now employment will bring Turkey more export, more services export, more tourism income, and other things. It's very magic thing to do. If Turkey did not do the same thing, I think we talk another perspective, another history. But Turkey did what did need to be done, I think. yeah, we can say the bad things or the good things, but this is the situation. Now, I want to ask something. We talk about the past of Turkey. A little bit we talk about the future of Turkey, but what will you especially expect the Turkish future? Why investors or the foreign countries, governments and other individuals, why should Turkey to invest? Why Turkey? Why now?
Okay. Well, to elaborate on something that you said, that throughout, well, from 2018-19 onwards, particularly throughout the COVID pandemic, why Turkey decided to stimulate growth despite inflationary pressures already creeping in at the time. So we could see that inflation was already on its way up. So instead of applying the brakes and reducing and increasing interest rates, Turkey did the opposite. And what you're saying, which I agree with, is that Turkey chose economic growth. They knew there would be a cost to it, but I guess at the time when they balanced it, they decided that they will go on the side of economic growth rather than applying the brakes. Another reason, well, I could see that they did that, was when at the time, 2018, 19, 20, when you looked at the industrial output of Turkey, and when you looked at more specifically the capacity utilization of Turkish industry, Turkey had excess capacity throughout that period. That means that if your country has got excess production capacity and industrial production and manufacturing is number one or number two revenue generator for Turkey, it's right in the top three, then
one of the biggest in the world.
One of the biggest, actually. Turkey is, in fact, one of the biggest exporters in Europe of electrical and electronic products. Not many people know that.
Cars, machineries.
And machinery and all sorts of things. Turkey is a massive manufacturing country. And if you have excess capacity...
That's why they choose to reduce of...
That's what I'm saying, interest rates. Because you had excess capacity. So if you have excess capacity, that means you are able to produce more. You're able to produce significantly more.
And sell more.
And if you're pushing exports and trying to gain competitive advantage in industrial overseas markets, it kind of makes sense to stimulate growth despite rising inflation. Because if you have excess capacity, you can actually produce competitively priced products and export them in international markets, which is exactly what Turkey did. And massive revenue was earned in the industrial output of Turkey in the last 5 years.
Because of the Turkish export of share of the world, I think, just surpassed 1.2%, something like that. And because of the Turkey did the reduce of inflation, reduce of interest rate, and just driving the car as fast possible, right?
Yes.
And because of that, Turkey now just want to just a little bit reduce of inflation, reduce of interest rate.
Why do we do this now?
Yeah.
Why do we do this now? Well, you can stimulate economy to an extent, but there comes a point when prices get out of control, which is what happened in Turkey. Let's face it, prices got out of control. Inflation kicked in big time. So your normal goods and services that your domestic consumers need to access became unaccessible. Look at the real estate market. Now, a lot of people are Turkish people who are in low to mid-income brackets. They are priced out of the real estate market now because literally real estate prices have gone up so much that they cannot afford to buy their homes anymore. Now, this is obviously not a very favorable scenario for a country whose population, for a country whose average age is 31. which means
Young, very young.
population. So we've got a massive young population in Turkey. On the one hand is great news. That means production, productivity. That means increasing GDP, increasing economy, growing economy, because you have these young populations that will work, that will earn more and more every year. They're at their prime. They're pushing forward. So Turkey is in that boat. But when those people cannot afford to buy homes anymore, there's a problem then.
Yes.
And this is where we are now. So
because we have the election, right? We
Exactly.
just threw it last year and
Exactly.
this very year, and we saw some of results to işte, if you look at the government's perspective, they lost the local election,
of course.
they won the national election, and there was a cost. I think.
I think that was a wake-up call for the
Yeah.
Erdogan government, because in 2023, okay, they won the general election for the next term. So the next general elections in Turkey are going to be held in 2028. But if you look at the local elections, they lost quite a few constituencies that they had before. So if local elections are an indication of the general elections in 2028, and local elections are always one of the best indicators of the general elections, then unless they do something, they will lose the general elections in 2028. So that also puts another push on the government to do something to turn the situation around. And what that something is, they've got to make goods and services, and particularly real estate, more affordable for masses of Turkish people, masses of young Turkish people.
They will build new houses all around the Turkey.
Exactly. So they will do that. Now, so let's recap and see what happened in the real estate sector, because this is our sector, this is what we talk about. If you look at prices, real estate prices, throughout the COVID period, what you will see is that from 2019, which is when we started really reducing interest rates dramatically, despite inflationary forces, from 2019 toward the end of 2022, in that 3-year period, property prices in Turkey, all over Turkey, but particularly major destinations such as Istanbul, they doubled, if not tripled, in hard currency terms. We're not talking about Turkish lira, which has devalued. We're talking about hard currencies, US dollar. What we were selling at the end of 2019 for, say, $100,000, at the end of 2022, early 2023, we sold the same properties for $250,000. Now, that's a massive increase. And a lot of people made a lot of gains, like unprecedented levels of gains people made in real estate. But now, again, what's the cost? All of a sudden, prices became unaffordable. Even when you compare prices in certain parts of Istanbul to cities like London, New York, Miami, even in that comparison, certain parts of Istanbul are beginning to look expensive. And that's the first time in history where we have prices comparable to London. Now, that's like, hold on a minute, what's happening here? So now, what happened from 2023 May onwards is a complete reversal of the macroeconomic policy. A massive austerity measure came in. 2023, throughout 2024. Interest rates now, bank base rates in Turkey now is 50%. Now,
it's too high.
Well, what did that do? Well, that brought the economy to an almost slowdown. Real estate transactions came to an all-time low.
And because of that, inflation pressure, I think it's slowing, right?
Yes, inflation is, the curve is tailed off. So inflationary pressures are now tailing off, and we are seeing inflation beginning to come down now. Beginning to come down. We will talk about the projections for 2025, 26, 27 in a short while. But where we currently are, which is really why I wanted to do this episode with Deniz, is because so far, all along the past 2-3 months, our audience, they know very well that I've been coming out on various videos and publications and saying Turkey is in a buy zone. Do not miss the opportunity. But it's one of those things that if you have Cameron saying the same thing like a broken record, like a mantra, then people after a while would think, hell on, this guy is talking about this over and over again. But is he the only one saying this? Well, no, I'm not the only one saying this. And I'm going to give the microphone to Deniz now to explain why Turkey currently, as far as real estate is concerned at least, is in a buy zone, and a very deep buy zone, and why that buy zone is coming to an end. In my opinion, we have no more than 3 months to go for the best of buy zones
because of
Turkish real
the
estate.
Turkish Central Bank interest rate decision, I think, right?
So what do you see? How do you see the future?
See some of good results fighting the inflation. I think I just came when I was coming here. I just look at the numbers about the Turkish inflation. They succeeded some of good result, I think.
The graph is tailed off.
Yeah,
it's obvious.
tailed off. Yeah, it's very normal.
We can feel it as well.
Yeah, as well, because consumption will goes down, and we saw some of companies struggling to survive, and we saw some of unemployment, let's say. But now, Turkish Central Bank will reduce interest rate.
When is going to be the first cut?
I think they will follow Fed and the European Central Bank. Really, they will follow.
So you think before the end of this year we're going to see a cut?
Yeah. According to Turkish Central Bank, they will cut a little bit because of we will reach the interest rate end of the year 40%. It's very important for Turkey. And the next year, we will reach our goals, and we will cut more and more, just like Fed and the European Central Bank. It's very important to follow the global trends.
Of course.
As a developing country, we should follow the global trends.
Exactly.
We shouldn't follow the locals trend. We should follow the technology. We should follow the research and development. Also, we should follow the Fed and the European Central Bank, because they will cut the interest rate. They will give more money all around the world, and that money will probably go developing country, and we will see in Turkey the money will come to Turkey.
Well, interestingly, Deniz, I was looking at some interesting statistics on foreign direct investment coming into Turkey in 2023, second half of 2023, and throughout 2024, this year so far. Now, although, and this is really something that I couldn't possibly emphasize enough, although hardly any of this money is coming into real estate now. Hardly any of it. Real estate transactions really and truly are at an all-time low. So the graph has bottomed out. The graph is at the bottom. Real estate graph. All-time low. Demand is at an all-time low as far as I remember in Turkey, at least for the past 15 years. Okay. However, interestingly, significant amounts of foreign direct investment came into Turkey in the last 12 months. Significant amounts, more than years before. However, not into real estate. Where did they go, Deniz?
They will follow the Turkish Central Bank decisions, and that money goes the banks. They will put their money...
Deposit accounts?
Yes.
Deposit accounts. Interest-bearing deposit accounts. And interestingly, deposit accounts were paying up to 60% per annum interest. 60%. And hey, from the beginning of this year, 2024, till now, the first 9.5, almost 10 months of the year, Turkish lira has been very stable against US dollar.
Yes.
32, 33, 34, back to 33, 32, 34. So it's moved between 32 to dollar to 34 to dollar. So we're talking about quite a stable currency, which means had you, just say, invested, say, $1 million into Turkish lira at the beginning of this year, at the end of this year, given that Turkish lira has been extremely stable, your 1 million would have come back to you as 1.5, $1.6 million. Where else you going to get such gains?
It's very impressive.
And you know what? A lot of people benefited from such gains.
Yes.
A lot of foreign investors. Hence, money didn't go into real estate and into bonds, bank deposits, stocks and shares, and other financial instruments that are closely linked to interest rates, central bank decisions. So a lot of people made a lot of profits, just not in real estate. However, when central bank starts cutting those rates down,
Yes.
and they already signaled. So
Yes.
although interest rates are still at 50%, like they were 6 months ago, but 6 months ago, banks were giving up to 50, 55, 60% on deposit accounts. Now, the maximum they're giving is 40%, 45%. So despite the fact that the base rate has not been reduced, the real interest paid on deposit accounts by Turkish banks have gone down because government has signaled start cutting the interest rates. Now, when the central bank starts cutting its interest rates, and interestingly, throughout 2025, I was shocked to see Deniz's analysis as the insider info that interest rates are projected to come down from 50% base rate at the beginning of 2025, end of 2024, to 15% at the end of 2025. So they will cut interest rates from 50% to 15% in 1 year.
According to international institution, right?
Exactly.
JP Morgan, Goldman Sachs.
Well, that's what
IMF.
you're hearing
Yeah.
from the government, the government insiders as well, because this is the plan. And so far, the inflationary forces have been arrested, targets have been reached. So all on track. They've done a good job. I've got to give it to them. They've done a good job with this round. You know? Now,
This is very hard job, yani.
hard job, but they've done it. Now, when that starts happening, that money will come out of
Yes.
speculative short-term
Indeed, yes.
investments. They will come out of bonds, deposit accounts, stocks and shares. Now,
Where money?
where will this money go?
Yes, this is the main question.
Yeah,
Because of
okay.
that, we're doing this opposite, right?
Okay. Well, in my opinion, a great majority of that money will go straight into Turkish real estate. Why? Because always, and crypto traders and stock traders, speculative traders, they know this just too well. When speculative instruments go up, the paybacks of speculative instruments go up, you rush into speculative. But when speculative instruments go down, you go into more stable, more tangible assets. This is investment rule 101. So, as money comes out of bonds, deposits, money will go into real estate.
I think you're saying, this year, Turkish real estate will attract, I think, $3 billion, something like that. It is estimation about the
Foreign investment.
Yeah, foreign investment. But next year, you're saying maybe $7 billion will come to Turkey
Yes.
as a real estate investors.
It's not just foreign investors that will move the market, though. Foreign investors, Deniz, at their best, they account for no more than 5% of all real estate transactions in Turkey. At their best. 2022 was the peak of foreign direct investment into Turkish real estate. In 2022, even at its peak, it was 4.8% of all transactions, less than 5%. Of course, it's that small in terms of the whole grand scheme of things. You're talking about an 85 million population country.
And
All young people.
As a developing country, we need more houses. We need
We
new
do.
infrastructure, many things.
We do. Now, here is the thing, and this is really, hopefully, in a constructive way, which, as our audience, you managed to follow us. But what really we're trying to explain here, and again, I can't emphasize this hard enough, is that we are in a buy zone. We are in a buy zone for real estate. And this buy zone will, without shadow of a doubt, start closing very abruptly as soon as they start reducing interest rates. And the first interest rate cut we expect will be before the end of this year. And throughout next year, interest rates will be lowered, here's the plan, down to 15% from their current levels of 50%. So this is a massive cut. Now, when that happens, demand will stimulate again. Demand will start rising again. So when demand starts rising,
And also, Turkish people keep their money in the banks.
Yes.
And now it is time to invest.
Exactly. And banks will start borrowing, lending money.
Yes.
Banks will start lending money. Because you know what? There's another thing now that is part of the austerity. There's almost a lending freeze by the banks. So people are not being able to get their hands on mortgages. So they closed all gaps to literally crash the demand. And they've done it. They've done it. If this is a buy zone, and we are recommending our investors, foreign investors, to come in now and take advantage of the buy zone, and I've already seen prices going down by 15-20% from their peaks of 2022. So prices have already come down 15 to 20%. Okay? Although asking prices may seem the same, but your final closing price has come down. People are giving bigger discounts because there aren't many buyers. Simple. Demand versus supply. But why is it that we are ushering our clients, almost summoning them to come in and invest? Well, if we didn't think there would be a next steep wave of real estate, we wouldn't be doing that. Okay? Yes, we're in a buy zone, but will prices go up again? And if they will, why should they go up? Why will they go up? What are the dynamics that will push real estate prices even higher than the levels they are at today? Over to you. Give us a few of the dynamics, because this is the important point.
Let's say, I understand this. Average sales, house sales in Turkey a year, 1.34 million
Units.
units.
So on average, Turkey sells around 1.3 to 1.4 million housing units a year. 95%, 96% of which are purchased by Turkish citizens, domestic market. Okay.
It's now, it's reduced.
Well, right now it's on the floor. It's down to 1/3. It's down to 1/3.
But end of the year, maybe next year, if interest rate goes down, the money, the locals follow the buy something. They got the money. They got the interest rate money. They follow the another opportunities to invest. This is the first point. But we had a disaster last year, and for maybe 5 million people lost or leave their homes and come to Istanbul, Ankara, and Izmir.
Relocated as a result of the earthquake.
And now we talking about too much rebuilding new houses.
I'm going to hit on that point now. Like this is a very important point and dynamic that I guess our foreign investors, our foreign buyers, of course, they've observed the catastrophe in Turkey with the earthquake last year, where 50,000 plus people lost their lives. This is this was one of the biggest catastrophes ever to hit Turkey. Last year, February 2020.
Disaster of century, they
the
call it.
disaster of the century. Actually, they call it that. Now, what it means for Turkish people, our foreign audience, our foreign buyers may not fully appreciate this. Now, look at Istanbul, for example. Look at Istanbul. When you look at Istanbul, over 60% of Istanbul's housing stock, well over 60%, was built prior to 2002. Prior to 2000, yes, well over 60%. Of course, it's a massive city. Now, prior to 2002, you're not going to believe this, but Turkey did not have proper earthquake regulations. They didn't. Which means majority of pre-2002 housing stock is not earthquake compliant. Sad, but true. Now, Turks know this just too well. And particularly after 2023, last year's disaster, earthquake, everyone wants to sleep in a new home. If you look at planning permissions granted for new builds in the last 3-4 years in Istanbul, the average number is about, 150,000?
Yes.
Whereas the demand for new housing is around 250 to 300 houses in Istanbul alone. So the demand is here, and that demand, after last year's disaster, doubled because everyone wants to rush to new houses now. Everyone. They don't feel safe.
4 million, 5 million people. It's too big
The
number.
demand is there, but the supply is here. You see, in an attempt to control Istanbul's population, which is reached 20 million now, massive
Very
population.
logical, I think. Yeah.
It's
very
logical.
logical.
In an attempt to control Istanbul's population, they reduce planning permissions given to new houses. They're basically saying, let's not build too many new houses because we're already 20 million in the city. We don't want more people to come. We want to maintain the population so we can give the very best of services and utilities to our existing population rather than keep on augmenting the population higher and higher in a city that's already reached its capacity in terms of utilities and services. So that's a wise move. So they are suppressing new licenses. Well, the more you suppress new licenses, the more of a gap you're creating between demand for new houses and supply of new houses. Now, this is a dynamic that not many of our foreign buyers are aware, because when they come to Istanbul, they naturally see that everywhere is houses, everywhere is properties.
Yes.
But they don't realize that Turkish people, who make up more than 95% of all real estate transactions in Turkey and in Istanbul, they want out of older properties into new properties. And they simply cannot find enough new properties because the supply is not there. So now, that's the segment of the real estate market whose prices will double, triple yet again once the demand hits. Now, this has been my projection for the last so many years.
It's very interesting to hearing this because Istanbul become one of the biggest tourist center in the world.
Yes,
One of the biggest.
I know.
20,
And it's increasing year on
20
year.
million people
Yes,
came to Istanbul just last year.
yes.
And now you are
As big as its population.
Yes, it's biggest. And now we will expect more and more. What will happen? We need to build new houses. We need to build new infrastructure and everything.
So, but this is what the government is saying. The government is saying, instead of opening new parcels and granting new planning permissions for new areas, for new houses, what they want to do is they want to push urban regeneration. So what they're saying is stop building new houses on new parcels. Instead, regenerate this old non-earthquake compliant stock. Hence, the massive push for urban regeneration, particularly in Istanbul. But here's the problem. As we know, because we have our own urban regeneration project, Sense Levant and Sense Şişli, two projects we're doing within the envelope of urban regeneration. In order to obtain planning permissions, in order to obtain all the signatures from all the stakeholders, incumbent owners of those houses, those apartments, those properties, you have to jump over many, many hurdles. It's one of the most difficult things to get the necessary approvals to clear the path for urban regeneration, which means urban regeneration, with the best of will in the world, can only progress very, very slowly. It has to be done, and it is the right strategy, but it is very slow because it's not an easy initiative to push through. Yet, the government is putting the tap on new built planning permissions in order to encourage urban regeneration. So there's a bottleneck there again that suppresses supply, availability of supply, in the face of rising demand. And this is why I keep on reiterating. The market dynamics are very different in Istanbul in particular than what meets the eye. Because the real demand and the real supply is not what people see. The real demand in Istanbul is for new earthquake-compliant buildings from Turkish people. And supply of that is restricted. So what does that do? It escalates the prices, which is exactly what happened in the last 3-4 years. They put a tap on it because they didn't want prices to soar anymore, because they couldn't arrest the price increases. They were going up and up and up. So they put a stop on it.
Yeah. I remember a number of statistics. Just last year, I think, 500,000 Turkish people left Istanbul and go to Anatolian cities because of that. Yani governments wants to, or the big plan, let's say. And we know the Istanbul potential, we know the Istanbul economy, hub of the Turkey, but we need to restrict to buildings and build new houses, but not growing the city. Not land. We don't want to use more land. We want to our now house land. We just rebuild our building.
Exactly.
And that means opportunity of investment.
Big time. Now, here's a question for you. When it comes to demand from Turkish people, let's look at Istanbul. When it comes to demand for Turkish people, where do you see the biggest gap between demand and supply for new housing in Istanbul? Suburban or city center?
City center, tabii. Of course,
Massively.
city center.
The demand from young populations of Istanbul who work and entertain themselves
And also,
in the center.
we have one maybe more universities student in Istanbul
in the center.
and still coming.
Exactly.
Still coming.
So there is massive demand for areas like Beşiktaş, Beyoğlu, Şişli, Ümraniye, Üsküdar, areas that we regard as desirable city centers. Yet, those areas are also the areas where clearing land for urban regeneration, obtaining planning permissions for new builds are the most difficult to do because it's established, it's mature, it's old infrastructure. There's no land, which means that demand for city center, particularly I underline affordable city center, is going to go sky high, whereas supply cannot be affected much. What will this do to prices? Again,
goes up,
up and up and up. So again, I'll bring you back.
Just like Turkish GDP, let's say.
Exactly. Bang, bang, bang. Just like Turkish GDP. Turkey's GDP 2024 is expected to be around 1.2 trillion US dollars. IMF expectation for Turkish GDP by 2030 is over 2 trillion US dollars. So the GDP is about to move in the next 6 years from 1.2 trillion to 2 trillion. Now, this is a massive growth. And when I look at real estate prices, and I plot real estate prices over the past 10 years against GDP growth, guess what? The lines are parallel.
Yeah.
So that means in desirable parts of this city, if you invest wisely today in the deepest buy zone I've seen since I've been living in Istanbul and before, okay, you're going to be doubling your invested capital over the next 5 to 6 years. Simple as that. There's no other way of looking at it. The dynamics are very basic and very apparent.
As a result, let's say buy zone for the real estate market, it's becoming too close, right?
Yes.
That's why you saying this, it's now time to invest. Why Turkey? Why now?
Well,
let's
I think
last question.
Why Turkey? Why now? Here is now we talked about basic demand and supply dynamics. We talked about the inflation and how macroeconomic tools, the primary tool to combat inflation, interest rates, how the government used them or misused them or used them. We looked at a swinger policy from 2018, 19, 20, all the way up to 23, when inflation was soaring, interest rates were being cut, so prices went up and up. And then all of a sudden, reversal of policy in May 2023, when interest rates were shot up to 50% as they stand today, in order to completely slow down the economy and arrest inflation. Yes. Now, there are other dynamics at play too. It's not just about demand and supply. There are other dynamics at play too, which will impact not just the real estate market of Turkey, but the whole economy of Turkey. What is happening in China? China was always seen as the low-cost manufacturer of the world. As far as I know, America pulls at least 50% of its raw material, inputs from China, right? Now, what does China not want to do anymore?
Low technology, doing the low technology, middle technology. They want to build high technology gaps, high technology cities, high technology cars, and everything.
Yes.
They're changing.
They changed their policy.
Yes.
China no longer wants to be the low-cost manufacturer of the world. So the low-cost manufacturing is slowly shifting to Vietnam, India, right?
Yes.
Now, where is Turkey in terms of manufacturing and provisional products and services? Is Turkey at the low cost?
Middle high cost, let's say.
Or premium?
Oh, middle high cost.
Well, more mid.
Yes.
In terms of where Turkey is. Turkey is definitely not a low-cost manufacturer because that is not Turkey's policy. But Turkey is definitely, as it stands, not your premium producer either. Turkey doesn't have a BMW. Turkey doesn't have a Mercedes-Benz. Turkey does not have premium products in the markets. Turkey is middle of the road. However, explain to us the R&D investment of the Turkish economy in the last 3 years, because I had asked you to prepare this and you had. Some very interesting statistics I saw there.
Yeah.
Investment into R&D by Turkey. And in the last 3 years, how much the growth rate of R&D investment in Turkey, we compared it to all European countries. Which country was on top in terms of growth rate?
Turkey.
Turkey.
Simple.
Turkey is accelerating its investment in R&D. Turkey is popping up and opening coding centers, robotics centers, biotech centers, artificial intelligence development centers all over. Turkey is busy investing in technology. This is a turnaround for Turkey. Turkey never did this before. Turkey ignored R&D before.
Actually,
last 5 years, Turkey is busy pumping millions, billions, multiples of billions of dollars in R&D, in technology. The very first product is already on the road, TOG, the Turkish electrical car. Apparently, you can drive from Istanbul to Bodrum in one tank, one filling. That's more than most electrical cars can do. Tesla can't do that.
Yes, of course.
Turkish car can do that because they got the right technology in it.
Because Turkey invests research and development too much.
Exactly.
And this is national program, not the local problem.
I know it's a national problem. Now, what will this do to Turkish products and services over the next 5 years if it continues at that rate? Very simple. It will elevate the brand equity of Turkish products and services internationally. When the brand equity of the products...
Kamran Bey, everyone knows in the world Turkish Airlines is a global star.
Yes.
Right? And we have now TOG. This is the electric car of Turkey. And we have Turkish defense industry. It's very famous now.
The drones, and the pilotless vehicles.
And other things. And it's time for the Turkey jumped another level.
And this is exactly what Turkey is working at. And you know what? All the data I've seen and all the people I met, we went to the techno centers. We met researchers and scientists in technology labs. Do you know what? I was more than encouraged because there is a lot brewing in Turkey in the background. And I am optimistic that over the next 5 to 10 years, we shall start seeing Turkish products and services in the premium shelf, not in the low cost or mid, in the premium shelf, where people will specify the products and services.
At the beginning, I said Turkey should follow global trends. Yes. And now you said Turkey will create the 100%. Global trends.
This is what Turkey is playing at because they realize that China is changing its model. They realize that Turkey is no longer the low-cost manufacturer, and they don't want to play that card either.
Yeah.
But Turkey is currently got this syndrome called caught-in-the-middle syndrome.
Yeah.
Like, they're not low-cost, they're not the competitive product, but they're not the premium
in
either
academics, we say
to charge big premiums and big margins.
Middle-income trap.
Yes, middle-income trap, caught in the middle. So Turkey wants out of that caught-in-the-middle syndrome. They want to go up the technology chain. And everything I see, every indicator I see, although a difficult path, although very challenging, but from what I see, Turkey will manage it over the next 5 to 10 years. Now, when Turkey manages that to become a brand in not just tourism, where it already somewhat is, but also in products and services, with it, it pulls everything else about the country. Everything else about it. What it does is it makes Turkey a more desirable place to be. It makes Turkish products and services more desirable to buy, to consume. With it, it makes everything that is Turkish or Turkey-related all of a sudden be perceived more premium.
So, just like Japan and South Korea, right?
Exactly.
Japan did great things. We saw South Korea develop itself like a machine. Yani they building new navy ships. They building new technology. Look at the Samsung. Look at the Hyundai. Turkey wants to build new brands, but
Yes.
we will invest technology and technology. That's the
Yes.
future of Turkey. That's the
Yes.
future of the world.
Yes.
And also 40 industrial revolutions say the same thing. If you follow the trends, global trends, you will reach as a developed country. And end of this decade, we will see some of good results.
I am
think.
optimistic that those will happen
Yani-
because I see the signs.
That means we will rebuild our infrastructure, houses, roads, train lines, poles, and everything.
Yes.
That's mean developing.
Well, already happening.
Yes.
Already happening. When is the last time you went to Galata Port?
I think 2 or 3 months before.
Galata Port is one of the best urban ports I have ever seen in my life. I haven't
It's
seen.
a good investment anyway.
It's amazing. I haven't seen anything like that anywhere else. Definitely not in Europe.
This is the brand.
Galata Port.
Brand
So
of Turkey.
they're doing it. They're beginning to do it already.
Yes. They
Yes.
invest billions dollars of the brand of Turkey.
Yes.
So let's point of the results. Yeah, we talk about too much. I think we come close to too many subjects, and as a result, why Turkey? Why now? Let's be so short.
In one sentence,
Yes, it's if you have a chance.
Turkey is the hub of the world. Istanbul has always been one of the most desirable cities in the world throughout history, throughout human history. This is not about to change. And Turkey is investing just in the right pots to elevate itself and its name, its products and services, and everything Turkish to a premium level. Give it time. It is in the works, and all the signs are there. By the time 2030 comes, this country will be a $2 trillion economy.
Come and invest.
Come and invest. It's the right investment. It's a safe investment. In a country of 85 million population,
Young.
whose average age is 30, 31,
Young,
vibrant,
very young.
young, upwardly mobile
And
population.
every year, Turkish universities graduate like 1.5 million students.
Yes.
1.5 million student, guys.
Yes.
Look at the statistic of the France, Germany, UK. You cannot find that number.
No, you can't. And again, even that, Deniz, if you go back 20 years, 30 years, that number was probably 1/5 what it is now. So if you look at the changes Turkey is going through, they're phenomenal. And all of those changes add up to an aspiring, growing country that will not stop. And thanks to its geography, its strategic location in the world, it cannot possibly stop. We're in a very deep buy zone as far as real estate is concerned. I cannot stress that heavily enough. The buy zone will close by the end of this year. The moment interest rates start being cut, which we believe is just before end of the year, goodbye to the buy zone. We've got 3 months ahead of us to invest wisely, so that over the next 5 to 10 years, we benefit from the tremendous growth this country will see. This is the bottom line of what we're here to say.
I'm very glad to be here, actually. And I enjoyed your conversation, your company, let's say. And this is the last word. Come and invest.
Absolutely. Take care.
Take care, you
Thanks a
guys.
lot, guys. Thanks a lot, Murtaza.